Let's discuss with Frank Holland, the anchor of CNBC's Worldwide Exchange, Eugene Daniels, MSNBC senior Washington correspondent, and incoming morning host of The Weekend here on MSNBC. Also with us, Catherine Rampell, who we can now announce will officially be joining MSNBC as a co-host of the evening edition of The Weekend on Saturday and Sunday. So first, welcome. Congratulations, Catherine. It's so great to have you as part of the family. Eugene, we already had our celebration, I think, last week, but really fun to have you both on with us. I'm going to get to you guys in just a moment, but let me start with you, Frank. We just saw this big sell-off in the last 24 hours. How are the markets doing this morning, some 30 minutes now into trading?
Hey there, Ana. Good morning to you. Kind of a mixed start to the trading day right now. The S&P just slightly higher right now. The Dow down more than 100 points. The Nasdaq coming off its worst day since 2022, bouncing back somewhat, up just about 0.5%. But that certainly isn't easing the concerns about the stock market that has lost. And I want you to make sure you're hearing this number correctly. $4 trillion of market value since its all-time high less than a month ago. I'm talking on February the 19th. Citi putting out a note saying that U.S. exceptionalism, it's at least paused. It's giving you a sense of the sentiment on Wall Street. So all this action on the stock market is one thing. There's also rising concerns about the U.S. economy. Remember, the stock market and economy, they're not the same thing. But these economic worries, they're certainly fueling these stock market declines. Important to note that it's not just one thing that's impacting the stock market or the economy. It's tariff concerns that are fueling inflation concerns, that are fueling recession concerns, kind of like a snake biting its own tail. And now there's new concerns about the consumer. That's especially after Delta Airlines warned it expects profits to be lower than previously indicated because of a slowdown in both business and consumer spending and travel. And this morning, some popular retailers like Kohl's and Dick's Sporting Goods also painting a picture of a consumer slowdown. Then there's the tech trade. That tech trade has really powered the stock market over the last 2 years. It's certainly unwound in recent days. And one of our most notable personalities here on CNBC, Jim Cramer of Mad Money, he made a statement yesterday that a lot of people are paying attention to. He's saying the Magnificent Seven, that's the basket of stocks that have really powered the stock market, those AI-focused stocks, it just doesn't exist anymore, according to Cramer. He says Tesla and NVIDIA, an AI name that's gone from obscurity to ubiquitous, they're just not magnificent anymore. That's according to him. He says they're just not magnificent. They're simply meme stocks right now. They kind of twist and turn on investor sentiment, sometimes called animal spirits. So coming up tomorrow, we have a big economic report. We have an inflation read, CPI. A hot read. I don't have a crystal ball, but a hot read could lead to a very big market reaction, more than likely to the downside. It's also the last read of inflation before the March Fed meeting. So there wasn't a lot expected in that Fed meeting, but that could possibly change. We did hear from Fed Chair Jay Powell on Friday. He said that the Fed has taken a wait-and-see approach when it comes to the Trump policies and rate cuts, but recession concerns, they're certainly growing louder and louder. Ana,
yep, Frank, as we've been talking, the markets keep crashing. They keep going down. Started at down 145. Now we're at down 416, now 418. Did I hear you correctly? $4 trillion in market loss in the recent weeks?
Well, now that we're past the opening bell, that number has probably increased. As you mentioned, a lot of people are going to say I'm bad luck right now, but the Dow certainly took a big move to the downside while we were talking, now down more than 400 points. The S&P, often called the broader market, down more than 0.75%. The Nasdaq losing all of its gains, a bit of a bounce back. It was up about 0.5%, now down 0.25%. But yes, you absolutely heard me correctly. And we've just seen a big change in momentum when it comes to the stock market. A lot of money going out of those big name tech stocks like an NVIDIA, a Tesla, an Amazon, a Microsoft, and an Alphabet, and moving to other we often call defensive parts of the market, things like healthcare and utilities. These are things that pay dividends. Investors looking for some protection away from some of these declines in the market. A lot of money also going into the bond market. So we're looking at the 10-year. It's often seen as a read on what things are going to cost if you want to finance them. We've seen the 10-year yield decline by about 50 basis points from its high earlier this year. That's an indication that investors are putting money into bonds, looking for safety from all this volatility.
All right, CNBC's Frank Holland, appreciate you breaking it down for us. Thank you so much, Frank. Catherine, just 7 weeks into Trump's second term. What's your take? How is the U.S. economy?
Trump inherited what was actually an excellent economy. Whether or not voters recognized it last November, we had very low unemployment, cooling, if not cool enough, inflation, strong GDP growth. We were hopefully still are to some extent, the envy of the world. And the best thing Trump could have done for this U.S. economy is just nothing at all. Like, go play golf and let the trends continue as they are. Instead, he seems to be hell-bent on sabotaging it. I mean, whether or not he recognizes that that's what he's doing, that is what he's doing. I have argued for years that presidents get too much credit when things are good, too much blame when things are bad. They get too much responsibility. They don't control the economy. It really feels like Trump is single-handedly trying to disprove me by doing undertaking all of these policies that are very detrimental, whether we're talking about raising prices through tariffs or raising the tariffs and suspending the tariffs and raising the tariffs again and again, which creates more uncertainty, which makes it almost impossible for businesses to make investment decisions, or other kinds of sabotage, things like threatening to deport large chunks of critical labor forces in agriculture, for example, picking fights with the Federal Reserve. All of those things are bad for economic stability, verging on, potentially dragging on economic growth and raising the threat, I will say, not definitively dooming us to recession or stagflation, but certainly raising the threat of those outcomes.
Eugene, of course, the stock market's just one little blip when it comes to the broader economy, and the president hasn't said much about the market sell-off. The White House has been downplaying the turmoil at large. Any sense if it's different behind closed doors? Are they worried?
Not really. They believe that what they're doing is the right way. President Donald Trump, his financial team, his advisors, they think this is the thing that they should be doing. These tariffs, they think in the long run, it will pay off. You heard President Trump last week in his joint address to Congress, basically telling people, farmers especially, that you might feel the pain, but it's going to be worth it in the end. Now, I will say it's not just the stock market. You also have consumer confidence is down, right? And so what that tells you is that a lot of this is also going to be on the PR side of things. How much does the White House, how much does President Trump talk about how people are feeling? They should, I think, President Joe Biden learned a valuable lesson. And when people feel something about the economy, it's very hard to pull that back. So whether or not the president and his team are going to keep talking about hearing how people are feeling and talking about what they're actually doing to make egg prices cheaper, for example, the kinds of actual evidence they have that they're going to be making moves on those in soon to be weeks and months, so that people feel better about the economy and taking that seriously. Otherwise, even some of his closest advisors do believe there could be some political risk for him.
As we keep watching the markets right now, down some 313 points. Catherine, the stock market has mattered to President Trump in years past. He's touted it as a measure of his success personally. Here's a sample of then and now.
I don't want to say this, it's too braggadocious, but we'll say it anyway. The Trump effect, it's you're the effect. Since the election, the stock market has surged.
I was very proud to have handed over the country, and the stock market was higher than it was previous to the pandemic coming in. It was an amazing achievement.
Now we've got tariffs, and the market has been going down.
Well, not much. I mean, in all fairness, you can't really watch the stock market.
What do you make of the president changing his tune?
Well, Donald Trump has never been overly concerned with intellectual consistency, to put it mildly. But yes, he has always claimed credit when markets go up, whether or not it has anything to do with his actions, and of course abstains from blame when markets go down. And in this case, I think it is pretty directly related to his own actions. Probably markets were overvalued to some extent last year, but Trump is destroying some of the fundamental strengths that the United States has. So it's not just a correction that I think we should be worried about. It's, again, if you are a business and you don't know what your price structure will be because you don't know whether there will be tariffs, where there will be tariffs, how that will affect your supply chain, it's very difficult to make investment decisions. It's difficult to make hiring decisions. It's difficult to make purchase decisions. All of these things suggest that companies are going to hold back and pause, and that means, at the very least, slower growth and potentially worse, declines in growth. I mean, that's what we talk about really when we're talking about a recession, is that the economy turns downward overall, including growth, unemployment, et cetera, or hiring. It is true that we probably should not pay that much attention to the stock market, even when times are good. I've said this many times when he bragged about the stock market. But in this case, I think the stock market really reflects concerns about the real economy. Stocks are essentially a measure of expectations of future profit flows for companies. And we've seen a lot of companies say in their recent quarterly earnings that they are concerned about how the tariff landscape will affect them, as well as what it will mean for consumers if, in fact, they become a lot less confident about the economy and their spending.
And just to highlight some of the unpredictability, the instability, this back and forth, the herky-jerky nature of some of these decisions. President Trump, as we've been talking, just announced on social media, on Truth Social, that in response to Canada placing a 25% tariff on electricity that comes into the U.S., he is now enacting a 50% tariff on all steel and aluminum coming into the U.S. from Canada, set to go into effect tomorrow morning.